Hi everyone, I'm Dawn at Stock Market Caddy, and today is June 1st at about 3:15, 3:16. I was asked by a person on stock Twitter, Bagger, that's fine. Your NICKLAUS timing strategy appears to have made money this past year, but how much did it lose? You know what? That is actually a very, very good question. And I think, you know, when anyone tells me how much money they've made, I'm always asking, well, in the back of my mind anyways, I wonder how much they lost to get those profits. It's a very fair question. In fact, the way that we teach our traders to get at that question more directly and how you can measure your own performance for the benefit of everyone and also the benefit of the person at StockTwits that asked this question is you want to know what the profit factor is. What the profit factor. The profit factor is much more important than the winning percentage or percentage on return. The hit rate, what they call the hit ratio, because you can win 9 out of 10 times and lose money. That doesn't tell you anything. But if you, in a given week, for instance, in a given week, if you make $10,000 and you lose $1,000, you divide the gross profit by the gross loss, and that would give you a profit factor of 10. The meaning of that is, for every dollar you lost, you made 10. That is exceptional. Anytime you have a profit factor over 1, you are making money. When you have it over 3, you are a money-making machine, okay, as a trader. And that's how you want also not to measure other people, but also to measure, or strategies, but also measure your own performance. So that question, that this person asked me, hey, how much did you lose, is a fair question, but it just didn't get right to it. A more poignant question would be, what is your profit factor? And if the person doesn't respect that question or doesn't understand what the profit factor is, or if you don't understand what the profit factor is, then you really do need an education because it is important, and I want to answer that person's question. But before I do, let me just point out the NICKLAUS timing model is right here on the ES, the NQ, the YM, the RTY, and the VIX. And this is the matching component. One contract in each of these markets back on May 18th, and you would be up somewhere around $19,000 to $20,000. But how much have we made and lost over the last, or this year, and over the last, year or two? If we had run that, that's the question. What is the profit factor? So let's go and show this person and everyone what our profit factor. Now, let me also share with you, this strategy isn't running on a Bollinger Band, isn't running on a moving average. It's not doing that at all. What it's doing, to give you some insight, it's taking the data stream of the NQ, the NASDAQ, the data number 2 of the VIX, and the data of the 10-year bond. It's running mathematical formulas on each, or actually all 3 of these markets, and making an integrated decision to go long or go short on the NQ. Now, it took us some time to write that code. It took us even more time to backtest that code and do something called forward test this code. Now, if you don't know what the VIX is, don't know what the relationship is with the 10-year bond in the markets, you're at maybe a distinct disadvantage to ever writing something like this. And you're also at a disadvantage if you don't know how to write code to backtest and forward test out, your own strategies or your own ideas, your own concepts. We would tend to think that you're kind of wasting one's time. But let's look at the performance, and it is true, by the way. What's happened in the past may or may not happen in the future. May not. But let's look and see. We can only go on what's happened this year. So let's look. This is the NQ from January 1 to today. The net profit running one contract, $82,000. $82,000. And I'm going to put that in my little calculator here. I'm going to just round this off. So bear with me here. We're going to get a complete tally. 82 we'll round it down. It has a profit factor of 5, made $5 for every dollar it lost, 13 trades. Not all bad. Now we come to the ES. The ES made 79,000. Not bad. Just this year. You can see in the previous years, 85 and 110. So she's doing much better this year. But that's the other years. Okay, but we're just going to focus on this year. 60% winners. Last year, actually no, that's not percent winners. That's percent gain. We can get into more. Actually, it shows you here percent profitable, 46%. So it meant that more than half were losers to that person's question. But that's okay. Losing trades are okay as long as the winning trades outperform the losing trades. So we got 79. Let's go to the Dow. The Dow, just this year, 69. So plus 69 plus the Russell. The Russell performs less. This year it did 40,000. Just this year now. This year's not over. 40,000. And then, and you can see, these other numbers that were down here. I didn't take the time. We can go back and look here. Here's the YM 81,110 and ES 85,110 in the years previous. And then, but let's go back to the VIX now, and the VIX itself is also part of the program, and that's 24. So they were rounded down. So just this year, if you had traded our NICKLAUS model, if you had, and you didn't, scalp the top, and didn't get out too early, you would have grossed somewheres over $294,000. $294,000. Now, does this mean it's going to make a single dollar in the next, 6 months? No, it may not. I can't guarantee that. Nobody can. What's happened in the past may or may not happen in the future. But what's happened in the past has a probability to happen in the future. And the beautiful thing about models, this type of homework and these graphs and this trade analysis will tell us and give us the information to help us manage the trades we're in. So we can maybe even do better than the model. For instance, if the model says the average winner is 3,000 and you're up 6,000, maybe you want to take that profit. In any case, I don't have any more time here on YouTube. My name is Don Marshall at stockmarketcaddy.com. And if you would like to know more about our NICKLAUS timing model, the swing machine, the Pebble Beach system, the out of bounds system, everything that we offer, our Q School program for traders, then feel free to give me a call. Feel free to visit the site. Feel free to follow on Twitter. We don't put out a lot on Twitter, but we don't certainly put out, opportunities. We don't really ever do that. And wouldn't advise anybody, we're not making recommendations to buy or sell anything. We are a mentoring site teaching other real people how to trade their kitty for fun and enjoyment and hopefully some profit. And but thanks for the question from StockTwits. If you would like a personal tour, give me a call. We can set it up, and it takes about an hour. And but our most impressive tool is the swing machine, which is what we trade day in and day out, and certainly can rival the NICKLAUS. The NICKLAUS is a timing model for position trades overnight from one stretch to another. The swing machine is something that we're trading day in and day out. With that, we're going to say goodbye. Thank you for the question, and don't hesitate to follow us for no cost on YouTube, on StockTwits, and better yet, feel free. We have a monthly membership, we have the Q School program, and we have an annual membership as well. Thanks so much.